Good evening, good afternoon, wherever you are watching from. This is Philip Institute. Welcome back again to my YouTube channel. If you are new to my YouTube channel, please kindly subscribe. Click on the notification bell so you can get notified each time I upload new content. Yeah, that being said, let us get down to today's teaching. What am I talking about today? Basically, if you know you trade using Btmm, you have to watch this video. It's very, very important that you watch this video. I get what I'm saying? If you know you trade Btmm, this video is gonna be helpful for you because it's full of some insight that you need to know so that you don't trade Btmm anyway, or you don't trade it in a stereotyped way. Okay, so let us dive into what I'm about to show you when it comes to Btmm. For those of you that have not watched my Btmm video, please you can just go to my playlist. I'm gonna add it here. I'm going to add it in the beginning of this video. You're going to see the playlist. You can go and watch every one of them as I talked about Btmm in details. So, but today I'm just going to be focusing on some aspect of Btmm that I think people are not paying attention to, and the reason is that they took Steve at his word, and they thought that Btmm can only be traded or can be traded. I mean, you only trade it in a stereotyped way because most of Steve's teaching he taught you in a stereotyped way. Respect to Steve, but when someone does something wrong or when he's not right in a thing, you need to say it out publicly, or you need to say this is wrong, this is right. I'm not saying that Btmm is wrong. No, Btmm is a great in institutional strategy. I incorporate Btmm in my trading style, and so far so good. It has been so much helpful. It has been so much profitable for me. But what I'm saying is that you don't want to trade it in a stereotyped way or in a one way that Steve has taught you, and then you missed out. You keep on losing, especially those of you that trade during the New York session. God, you need to watch this video. So Btmm pattern, let's start with a Btmm pattern. You have something like this, something like this. Then we have the stomp ons, then we have the pattern, then we have the drop, three level of drop. Then comes the New York guys. Then we have the pattern, then we have the reversal, then we have the consolidation. I think you all should be familiar with Btmm by now. We have this Asian range, right? We have the pattern, we have the trend, we have the New York pattern, then we have reversal trend, then we have the consolidation. Okay, this is a typical Btmm trading style. That is, at the opening of the market, there's an Asian range. I'm not going to speak much on this. Then we have, the stop ons. I did not include the stop ons. We have the stop ons also. SH. The stop ons. So we have the stop ons. Then we have the pattern information, then you have a trend, your stationary trend, and then do another session. Then we have the New York pattern, the body formation, which signifies the reversal. Then we go for like this. So now this is what Steve said. Steve said that this is a typical market maker cycle. This is how it is that when you are trading during the New York session, you are looking out for a reversal. Are you get what I'm saying? But when you look at the market carefully, especially those of you that trade the New York during the New York time, you are going to miss out if you think that every New York pattern or every New York session is going to signify a reversal. No. And so far, so good. Every time I've been trading, I've gotten to know that most of the time, the market makers, they don't always reverse during the New York session. They can give you a stomp on the New York session, and then they continue in the direction. We are going to look at the chart, and we are going to see how this is playing out day in, day out. That most of the time, the dealers, the market makers, they don't do these reversals. And most of you think that, okay, this is New York session, it is time for reversal. Then you just trade the opposite way. If the market was in a bullish trend during the London session, the New York session, you want to sell, and then you just sell without looking at what the market is even actually saying, and you keep on running at loss, edge and everything. Look at this pattern here, guys. Look, ideally, this is a typical market maker pattern or market maker cycle. But the truth of the matter is this: if the market maker only trade one way, everybody will be profitable, because we already know that this is how they trade. We know that this is a cycle we are looking at for. So you don't want to look out for any other cycle apart from something like this. And then the market maker always does this every day. No, nobody is going to be run at loss, because we already know where they are going. But that is very, very wrong, because if we know where they are going, the market makers are going to run at loss. They'll be losing money to us. You know what I'm saying? But they always conceal their moves and their behaviors. And you don't always see this every day. It does not look like this every day. Sometimes it might look like this every day. It might give you an Asian range, give you a stop on, give you a London pattern, then give you a trend, then give you a W pattern on the New York session time, then give you a reversal, 3-step reversal, then a consolidation for at the end of the day. They can do that, but not every time. Not every time. Most of the time, they don't do this. Have that in your mind. They don't do this. Most of the time, they don't give you an Asian range. Sometimes you could get to your chart 8:45, 8 o'clock a.m. For those of you that are in Nigeria, you could get to 8:45, 8 o'clock. Asian range will have already turned to like a trend, and then you might feel that, okay, this is an Asian range, and then probably you might think that, okay, now it's time for me to look for probably a buy trend. Then you can just, at long run, you might just see that this, okay, you want to look out for a sell, because it has to reverse and then start selling back. But probably you might think that this range is not a range. Okay, this is a trend. Probably this is a stop on. Like I'm saying, so you might want to say you want to enter a buy for a trend, and then before you know it, once the London guys comes in, then you see a continuation of that buy trend. Does that look like a typical cycle, market maker cycle? No, it is not. It does not look like that. Okay, so most of the times, the dealers, the market makers, they don't give you these cycles you are seeing here. This is the fact. Quote me anywhere, I can defend this anytime, and then it's just about looking at the chart and getting the evidence from the chart. The chart does not lie. Human can lie, I get what I'm saying, but the chart does not lie. So what am I showing you today? Now I want to show you a way of not. I want to erase that stereotyped way of trading BTMM away from your subconsciousness, and trade the market opportunity. That is, you trade what the market presents to you. You're not trading because Steve says or Btmm says Asian range, and you end up with not Asian range, stop on, you end up with not stop on, pattern, you only saw the pattern, and you saw a trend during the Asian range, and then you thought that, okay, at the end of the trend, you were going to get during the Asian trend, you thought that you were going to get a W formation or an M formation. Just to counter the trend, but you know it was a continuation of that trend. So what? I've lost this trade, and that is it. And during the New York session, you thought, okay, now this time for me to trade the reversal. Then you trade against the reversal of the London session, and before you know it, the market continues even in the direction of the trend of the London session. You say this is not working. Yes, it's not going to work because you are trading it in a stereotyped way, and that is how Steve taught Btmm. Now I'm going to give a disclaimer here, please. You see, this trend, you might want to trade, and then you might not want to trade any other market maker pattern other than, other than this. You might choose to want to trade like this. I get what I'm saying. You might choose to want to trade like this. No problem with that. You might choose that if I don't see this Asian range, I don't see stop ons, I don't see the M formation pattern during the London session, I'm not going to enter. If I don't see the New York pattern, the reversal, you're going to enter during the New York. You can decide to trade like this, and then if you don't see all this, you're not trading. But my point to you is that if you should say that you just want to stick with this kind of pattern alone, I'm telling you, most of the time in the week, you're not going to be trading. Most of the times in the week, you might not even trade a whole week. Sometimes you might trade twice or three times in a month if you're only looking out for this pattern. So that being said, what am I saying today? Okay, now for those of you that want to trade BTM, now listen to me. Sometimes there's going to be an Asian trend. I call it Asian trend, not Asian range, because sometimes during the Asian session, you might want to be looking out for a ranging, but you are going to see a trend. So in such case, what do you do? Now, in such case, what you are looking out for is that you want to look out for the pattern during the London session. For those of you that trade Btmm, you know that you only trade two times in a day, two sessions in a day rather, the London session and the New York session. Now, let's take, for instance, there was an Asian range, Asian trend rather, not Asian range. We have this kind of Asian trend coming forth. And then you as a BTM trader, you go to the market and then you want to trade. Then you saw this Asian trend. You said, what? But BTM said Asian range. Calm down. You have to keep your cool. Then what are you looking at for? You are looking at for a pattern that is going to allow you to either trade in the direction of the Asian trend or in the opposite, in the reversal, or in the against the Asian trend. You get what I'm saying? So now you want to look at something. If you see something like this during the Asian session, during the Asian trend, you should know that the Asian trend that began here is a continuation of the trend. So the market will keep on going down. But if you see something like this, something like this, something like this, during the Asian trend, you see something like this, then you should know that it's a reversal. So you want to trade the reversal. Are you get what I'm saying? So this is how you trade when you see an Asian trend. Putting in mind the higher time frame trend, the overall market structure. You know what I'm saying? Like I told someone, look, Steve did not teach market structure when it comes to BTM. And I told them the reason personally to me, I feel that he only taught market structure with levels. That is, instead of market structure, he put levels into it. That is, 3 levels of rise, 3 levels of drop. That is, you're reading that if the market should drop 3 levels, you know that the next thing is a reversal. You know what I'm saying? If the market should rise 3 levels, the next thing is a reversal. So that's like a market structure. Because ideally, if you want to trade market structure, this something like this over here, this M formation over here, once there's a break of this level, there's a break of that's the change of character. Then you want to come back when the market tests this level and you want to keep on trading. When you want, if this is the market structure, this and the market break this level, then the market comes back here. This is a change of character. Then the market comes back here to retest this level. Then you want to enter here and then continue. So I would say he used levels instead of markets, instead of market structure. I get what I'm saying. So that is that. So this is what you want to see. Okay. Asian range, Asian trend, then looking for out for a pattern. If you see something like this, then you want to continue in the direction of the trend. So you want to sell. Don't keep on selling. And if you should see something like this, do the Asian session, and you start it's trending, then you're looking out for something like this. If it's something like this, if you see a pattern like this, then you want to keep on buying when the London guy comes in. So if you see this kind of pattern in the Asian trend during the London guys, if the London guys or towards the end of the London of the Asian session, if you should see something like this, 8 o'clock, 8:45 a.m. in the morning Nigerian time. For those of you that are watching from any part of the world, you can convert that. So this is an M formation, which signifies a continuation of this Asian trend. This is a W formation, which signifies what? A continuation of this Asian trend. Are you getting what I'm saying? I think I am clear on that. So that's how you want to trade this when you have an Asian trend. Okay. So when you have now, let me talk about the New York session. Now you know that ideally during the New York session you want to trade a reversal. Please erase that mentality from your mind, because most of the trade I've taken today, especially this year, none of them has ever. Most of them there was no reversal in them. I took them during the London session, and then I held them till around 8 o'clock p.m., 5 o'clock p.m. They were not. They did not reverse throughout from the London session to the New York session. It was all the same pattern from the London session. Even most of the time, I got on that sometimes, even when you hold a trade, when you take a trade during the London session, the market would not give you a major move during the London session. It During the New York session, that's when you begin to see the major moves coming, showing forth in the direction of the London session. Sometimes you might just only get one of these moves during the London session, and then the market will just pull up, start ranging around this level. Markets will just sometimes once you just get this level down, you see the market maker, they will just pull it up, pull the trigger up again. Then you see them giving you something like this. Some of them will even want to give you another liquidity grab, then come back here, then especially towards the starting of the New York session, you might see a liquidity grab up here. Then once they come back here, they are never coming back here again. They will just keep on going and going. It will even be a long trend, a long sale for the London for the New York session. So that's being said, let me just talk about the New York session. So in the New York session, you're not just looking at for reversal. You are looking at for a pattern that's going to tell you if this market is actually going to reverse. This is an Asian range. Let's assume that you have this kind of thing, a stomp hunt, then the pattern, then you have something like this. You have this kind of thing during the London session. Is a clear. Then the next thing you want to do is that you want to continue. You want to you want to sell. You want to buy against the trend of the London session. Don't buy. Let the market tell you what it wants to do. If the market should give you something like this during the London session, towards the opening of the London session, towards the end of the London session and opening of the New York session, if the market should give you something like this, please don't buy. It's a continuation of the trend, so you want to keep on selling. It's a continuation of the trend. I've talked about peak formation resets, and this is a peak formation reset. It only resets what is began, so they will keep on going, moving that this way. So the only time you have to trade New York reversal is if the market should give you a New York reversal pattern like this. This W formation, this W formation over here signifies a reversal. So it was a New York reversal pattern. But if it should give you an hem during the New York, M is not this is an hem over here. M signifies itself. So when if you give you an hem during the New York pattern, during the New York session, it is not a reversal. It is not a reversal. It is a continuation. You know what I'm saying? So this is what I want you to understand when you trade BTMM. Okay, you don't want to trade it in a stereotyped way, like Steve taught you. These are the no. You are not a robot that just you don't move the way you are being programmed. You are not programmed to move in a certain direction. You are human beings. You understand, you feel, you touch, you can reason, you can study the market. You are going to see what the market is going to show you. I know what I'm saying. You're going to see how the market moves. Don't just go by what Steve taught you. There's a place in the Bible that the Bible talks about some people that they called the burial Christians. That is that when Paul the apostle comes to teach them the word of God, this set of people, they go back home. They go back home to check if what Paul has taught them, if it was according to the scripture. And they found out that everything that Paul the apostle taught them was according to the scripture, and they followed it. So anything that you learn from any person, any YouTuber, any mentor, any coach, you want to go back home, you want to go back and sit down yourself and then try them out. If what this person really taught you, is it really the way it is? If what this person really taught you, is it what the market is saying? Is it really true? Then you cross check by yourself. If it is not, you throw it away. If it is, you hold it. Or if it is not, then you look at, okay, what is not true in it? How can I blend? How can I change it? I got to know this by my personal study. I watched these morals and videos, and then I saw all these Asian trend, I mean the market maker cycle. Then I checked up on the chart, and I saw that what this man is saying is not always true. They are always probably like 20% true of all the time. I cannot always have a typical example of this kind of market cycle every day, but there are always varieties of different market maker cycle every day. Even while I was even watching this video, I said to myself, if this is how the market makers gives these cycles every day, that means they don't have any other card. That means they are the they are the they are the foolish people most they are the most foolish people I've ever met in my entire life. Because how can you trade like this, knowing that people already know how you set up your trap, how you set up your pattern? I'm telling you, if I was a market maker, I would not always trade like in this pattern. I will give a varieties and I will give a change in a pattern every day, every day. And this has always proven to be true, that this cycle does not always play out. In short, you might often see this cycle probably once or twice, highest 3 times in a month. That is a fact. You can go and backtest what I've taught you, what I've said in this video. Backtest it, look at the chart yourself. You are going to see that this is right. This is what I'm saying you, telling you now, it is right. Okay. So that being said, let us just look at the charts for some examples so that we can have a broader example of what we are talking about here. Guys, this is gold. Now let's this is on the 3 minute chart. Now let's look at this. This is Asian range, right? This is an Asian range, right? Let's assume this is a stop hunt. Let's assume this is a stop hunt. So what should we call this? Can you see what I'm trying to say? Does the market maker cycle pattern that beats Steve thought, did this should play out here? No. Look at here again. This is Asian range, right? These are all throughout Asian range. And what do you see? Does the market maker cycle play out here? No. You cannot stereotype the market maker. It's impossible. That's what I'm trying to say. You cannot stereotype them. You cannot. Now look at what I'm trying to say. Right here, our pattern did not play out, but it played out at around this place. An M formation which simplify itself, right? If we had if we had if if we had if we had set our stop loss around this level, right? Because of this information we saw here, which is a reversal, our stop loss will not be hit the following day. Now, but let's assume we did not trade here because there was no clear pattern formation here. Okay, but the following day we had an Asian range, and then we still have this all Asian session, but we have something like this, a pattern forming. We have an information pattern forming here over here. We could have sold, right? We could have sold. Then our stop loss would be at around this level. Now, this is all London session. I bet you this is all London session. This is all London session. This is still London session stroke New York session opening. The market makers comes back here, then comes back here again, then gives us something like this. What is this? Is this not an information? Then we have a continuation of what we have here. Until we now have something like this, then a ranging market. This is a information, which signifies the what? If you're unable to enter at this level, you can enter here. When you have this unable to break, but you have an information forming here, then your stop loss was just going to be at around this level. Then you write it down, an information. There was no reversal here. You would have thought, okay, New York session reversal. I'm sorry to say, there's going to be no. You are not going to have a reversal in this market. It's just a further sell and to sell and to sell. I get what I'm saying. So you can see that it you cannot just stereotype the market maker. What you want to understand, that you want to understand your market structure, then you want to understand your pattern. If they give you stop hunt, fine. If they give you Asian range, glory be to God. If they give you stop hunt, fine. If they give you an information, fine. On during the London session, glory be to God. Sometimes even if they give you all this, there is not going to be a major big move during the London session. They will only keep on eating the highs, giving you eating stop loss, coming back down. They might even end up ranging most of the time during the London session. Then before you know it, at the opening of the New York session towards the end of the London session, they're going to see that they're going to do a huge liquidity grab. Once they have that liquidity grab, then they move in direction that they have intended to go during the London session. Let us look out for another let's look out for another distance, let's look out for let's check Euro USD so we can see what really plays out. Excuse me. So same thing with Euro USD here. These are all markets, today's market. Look at this. This is an Asian range, right? We have an M form, a W formation, right? Then we have 1, 2. This is New York session now. Look at what they give to you. They gave you this. Excuse me. They moved 1, 2, 3, then moves back down, then they continued the uptrend. Where is the New York's reversal session here? Where's the New York reversal here? None. You could find none. There was no New York reversal here. So you don't want to start looking out for the New York reversal up and down. They're not going to give you that. They only give you that on rare occasions. Now let's look at this London session. Now, for those of you that have watched my videos on M formation, this is a strong multi-session intraday M formation. This is a strong M formation. One of this is not even, it is the strongest M formation that you can ever trade. Can you see? So it's very strong. So, and if you should use the Btmm indicator, there's going to be a blue tracer here. And you know what Steve said about the blue tracer. And you know what when you watch my video on liquidity grab and liquidity zones, you know what I said about high of the day or high of yesterday, that those are where they set liquidities often. You understand? So at that place, you want to look out for what? For trading in the opposite direction of the market. You know what I'm saying? So now look at what the market did for us. Let's just leave we know that we are going up for a sell because this is a multi-session M, right? Now, the market gives us this multi-session M. So we have, excuse me, we have this multi-session M. It's not perfect, bro. Let me draw it to be perfect. Okay, something like this. So we have multi-session M. So this is multi-session M. Okay. Now, having known this, then we are here. Let's assume this was Friday. Now look at the market gives us just a stop on phase. Then how do we know if you are to sell on this market? Let me clear this. How do you know we have to sell? Now the market gives us something like this. Then ideally, if you should zoom it out, you see that this is a huge M formation. Then these are all London session playing out. Look at the market is going down gradually. Now look at what during the New York sessions. Look at what the market did. The market gave us something like this. Then give us something like this. Pull the trigger higher up to grab some liquidity. For those that got it right, those that entered here, you place your stop loss here. I'm sorry to say, your stop loss has already been hit. So during the London session, look at what they did. This cannot be faster. This is a strong M formation. This is an M formation. Look what they did. The New York session, they keep on going down and down and down they go. Where is the New York reversal? It is nowhere to be found. So are you going to say that you are trading in line with BTMM, what BTMM taught you, and then because it always says during the New York session there will be a reversal? That like Steve will always say that it is crap. It is crap. That concept is crap. I'm not saying that you should just say it is crap. I have evidence to show you for it, and these are the evidence I've shown you that you can see that it is a crap. It is not does not always show in the market every time day in day out. You can see, and then the market reverses. I know what I'm saying. So this is what I'm trying to tell you. This is what I'm trying to show you. We can go on and on and on and on, and then you'll be seeing it playing out in each pair, in each market. You'll be seeing it playing out there. There's nothing like this thing in this kind of thing. You will see it playing out every time, day in, day out. Let's just look at for this last example. Then I'm going to close for look at this. Look at this. You did you look at from even here? Do you even see any New York reversal session? No. Where is the stop ons? None. But we know that it's going to go a sell. Why? Let's say this is an Asian range. Let's say this is an stop ons. Let's just say it. But I can see an M formation here. When you hit to the upside down, I know that it is strong. It's going to sell because when you have like 3 touches, the price action we call it double. I mean triple touch. Look, I'm still going to make a video on BTMM, price action, and SMC. I'm going to show you the secrets of all these things. Don't let anybody deceive you. They start telling you price action is crap, SMC is crap, supply and demand is crap, BTMM is crap. It's a lie. They all are the same. The only difference is that they only teach the same concept with different terminologies. That is look. Steve is going to tell you that this is an information, but price action is going to tell you that this is a double top or triple top. These people are SMC is going to tell you that this is a mitigation. What are we talking about here? They are all the same concept. You are only teaching the same concept using different terminologies. So the only difference in them is the terminologies, not even the concept. The market is the same thing. What they are teaching is the same thing, but they only taught it with different terminologies. When you even look at their core teachings that's going to make you a profitable trader, their core teaching are the same. They only make use of different terminologies. By God's grace, I'm still going to take you guys on that to show you how SMC Btmm, price action, supply and demand, their core concept and their core teaching are all the same. Now, look at, okay, when you have a more touch, you know that's a sell. And look at, we have a sell here. And then the market even end up ranging for most of the time. Where is the New York reversal? None. Even if I was the one, I would have bought, I would have sold, because let me, if I was the one, I would have sold here, because after the market comes back here to retest or to mitigate, certain seem to say mitigate, um, price action will still retest. Look at, we have something like an M formation. I would have sold. I would have sold. So if I even sold, my stop loss would be around here. So my stop, I'm even safe. Going into the following day, I look at the following day, Asian range throughout London session, guys comes in. Because what do you have? We only have an M formation during the London session, nothing else. The New York session then give us a further sell. Then we have something like this. Then we have a consolation, and then we come down to this level of today, I mean Friday. Then we have something like this forming, giving us a lower low, going down. What did I tell you about high or low of yesterday? There is always a what? Liquidity here. So you are expecting to what? To want to sell because of, Steve will tell you that there's a blue tracer here. If you use the Btmm template, you'll be having a blue tracer here. So there's liquidity here. So what the maker did was that they were coming to what? To come and grab liquidity. So it was a clear M formation, the B formation rather. Throughout the London session to the New York session, I mean to the Asian session, we have a clear W formation. Then we have up we go. New Year guys gives us this. And then it ranges. My question again, where is the New York reversal? None. I cannot find them there, because look at what it gave us here. This is typically an hem formation. The second leg of the hem formation formed during the New York session, and then we have what we have around here, and that is it. So it can keep on going on and on and on like this. But what I want to do is that backtest it yourself. You're going to see how true this has been. So you don't want, now you have a new perspective of Btmm. You don't want to trade Btmm the stereotype way or the one-way traffic that is still moral thought. No, you want to trade it with understanding. I know what I'm saying. So what I've taught you now, I want you to backtest it, see if it is true. If it is not true, throw it away. But as you can see, I showed you this on the chart, not even old market, recent market. These are just last week markets. These are just last week market, and I'm showing you how this playing out. So I don't think you have any reason to doubt what I've taught you so far. So you want to trade it with understanding, okay? So if you know you love this video, make sure you give me a thumbs up, like, and share this video, and subscribe if you've not subscribed. Then turn on the notification bell so that you can get notified each time I upload new content. I'm going to uploading new content as interesting and as great as this. Okay, so please, and I don't want you to miss out from it. So you want to turn on the notification bell so that each time I upload new content, you would be there. You are going to participate in it. So until I come away next time, keep trading and keep making the money. Bye bye.